Today we're going to be covering Baba stock and the earnings they reported last week. So without any ado, let's get into it. On Friday, August the 29th, Baba experienced dramatic stock price gain with shares jumping 12.9%, whereas the S&P 500 actually fell 0.64%. Here are the key reasons why I think this happened. So number one, we've got beating profit expectations despite revenue miss. So analysts and investors alike had been cautious heading into the report, citing concerns about stiff competition in Chinese e-commerce and continued investment drag from food delivery and quick commerce. Yet, Alibaba surprised from profitability. So adjusted earnings per ADS actually came in at 14.75 yuan, beating consensus estimates. GAAP net profit surged 78% year over year to 43.12 billion yuan. This impressive jump was partly supported by gains from equity investments and the sale of assets such as Trendyol's local Turkish business, while revenue came in at 247.65 billion yuan, which was slightly below analysts' forecasts of 252.9 billion yuan. The earning beat demonstrated disciplined and cost control and strong monetization in key growth areas. The result was a signal to the market that Alibaba can grow profitably despite fierce competition and external pressures. Number two, where growth came from. So Alibaba's sprawling empire encompasses of e-commerce, logistics, cloud computing, digital media, and emerging technology. However, investors were particularly encouraged by three areas of strength now. So we've got cloud intelligence, so AI as a growth catalyst. Alibaba Cloud delivered 26% year-over-year revenue growth, outpacing expectations. This expansion was not merely about server rentals or storage capacity. The company highlighted increasing adoption of AI-powered services, generative models, and enterprise digital transformation projects. So this segment is now seen as a strategic growth engine with parallels to how Microsoft and Amazon built investor confidence through Azure and AWS. For Alibaba, cloud is not only a revenue driver, but also the foundation for sovereign AI infrastructure in China. B, we have international e-commerce expanding abroad. So international commerce revenue rose 19%, powered by platforms such as Lazada, AliExpress, and Trendyol. This underscores Alibaba's effort to diversify beyond a slowing Chinese economy. International growth also reassured investors that Alibaba's model can scale in markets where competition from Temu and others is intense but not crippling. So, C, domestic e-commerce reliance in China. So, revenue from Chinese e-commerce grew 10%. While growth was modest compared with international expansion, it still demonstrated resilience. Investors were particularly pleased with Taobao's user engagement remaining strong despite aggressive competition from JD.com and Temu. All right, number three, we've got strategic independence from Nvidia. So, beyond the headline earnings, one of the most consequential news items that was found in this report was the disclosure that it is developing its own AI chip. This move was interpreted in three ways. One, risk mitigation by reducing reliance on Nvidia GPUs, currently in short supply due to US export controls. Alibaba lowers its vulnerability to supply shocks and political constraints. Two, alignment with national policy. So China has prioritized domestic chip development. Alibaba's initiative signals alignment with Beijing's push for tech sovereignty, which could bring policy support and subsidies. Three, long-term strategic value. For investors, this places Alibaba not just in the bucket of e-commerce companies, but in the league of AI platform builders. That strategic re-rating helped justify Friday's sharp rally. It also created an interesting divergence in the market. So whilst Alibaba rose double digits, Nvidia's stock extended a 3-day losing streak. Number four, profitability boosted by non-operational gains. While adjusted EBITDA margins were under pressure due to investments in food delivery and logistics, GAAP profits soared. This was due to gains from equity and holdings in affiliates, divestiture proceeds, notably Trendyol's local business in Turkey. Skeptics pointed out this quality of earnings was not purely operational, yet in a market hungry for Chinese tech success stories, the optics of profit growth at scale outweighed concerns about sustainability, at least in the short term. Number five, macro tailwind supporting Chinese equities. So Alibaba's rally was also aided by broader currents. So number one, we have tariff relief. So a US federal appellate court struck down major Trump-era tariffs, raising hopes for improved conditions for Chinese exporters. Monetary environment, with US inflation cooling, expectations of Fed cuts bolstered global equities, especially growth in tech names. sector sentiments. So analysts had become incrementally more constructive on Chinese internet stocks, with consensus ratings for Alibaba's leaning moderate buy and average price targets suggesting nearly 30% upside from pre-earning levels. Together, these factors added a sentiment tailwind that magnified the impact of Alibaba's earnings beat. Next, we've got number 7, risks and challenges, a balanced view. Now, it is important to note that the market actually chose to ignore and downplay a few things. One of them was revenue miss. So the top line figure fell slightly short of expectations, indicating competition and slower consumer demand in China. Next, we have margin pressures. So investment in food delivery and promotions weighed on profitability. Third, we have regulatory uncertainty. Although not in headlines that day, regulatory risk for Chinese tech firms remain elevated compared to its US peers. So these risks did not deter the rally, but they remain lingering overhangs for medium to long-term investors. In conclusion, so Alibaba's stock surge on August 29th was the product of a perfect storm, essentially. Okay, so a profit beat that reassured investors of operational resilience, cloud and AI growth that validated its long-term strategy, the AI chip initiative which reframed Alibaba as a player of the global race for technological independence, supported macroeconomic conditions that amplified positive sentiment, and perhaps most importantly, a market eager for Chinese tech success stories amid global uncertainty. The earnings may not erase all the structural risks facing Alibaba, but it showed that when earning strength aligns with strategic vision and macro support, investors are ready to reward bold execution. Thanks for watching. If you enjoyed this video, please like and please subscribe. If you have any other video recommendations, please let me know and I'll try and get onto it. Thanks for watching.